All right, crypto taxes are probably one of the things you just don't want to hear right now, but as we end kind of our second cycle here of Q2, we start to move into tax prep season, and this year especially is going to be one you guys out there, if you're invested in crypto, this is going to be one that you really need to pay attention to what's happening in terms of both tax law, but also the process of how to maybe handle crypto taxes in the future. My name is Paul Barron. Welcome back to TechPath. And today we're going to dive into that with David, who is from CryptoTrader.Tax. Great to have you on the show, David.
Yeah, thanks for having me on, Paul.
All right, so you're co-founder and CEO. How long have you guys been around? When did you start your business? Kind of tell me a little bit about the construct of what you guys are doing there.
Yeah. So we launched the product in the spring of 2018, so about 3.5 years ago. And really, we build software that automates the entire cryptocurrency tax reporting process, really for retail cryptocurrency investors and users of all kinds.
So almost like the TurboTax for crypto, in a way.
Exactly. That's exactly how me and my partners framed it when we launched the business 3.5 years ago. Exactly that.
I like it. So with mostly a software as a service product, or is there any hands-on involvement for people that get onto crypto into your platform?
Yep. So it's all software. We staff like a full real-time customer service team, but outside of that, it's software just like TurboTax, like you referenced, that you can use to pull in all of your historical transactions, run it through our tax engine, and then we'll spit back your relevant tax forms that you can either send off to your accountant or tax professional, or you can even import them into tax filing platforms like TurboTax, like TaxAct, H&R Block.
Right.
And so that's kind of how it works.
How has been so you guys were launched right after the last, big cycle. So you built during a downtime in crypto. I'm kind of curious, what was the adoption rate? What were some of the demands that you were seeing from early customers in, say, 2018, 2019, pre this bull run? What were they concerned with? I guess they had already kind of gone through the cycle and pain in that last one, so they probably were looking for your solution. What were some of the things they were looking for that you guys were able to solve?
Mm-hmm. Yeah, so we started building at the tail end of 2017, really with that big bull run as we saw Bitcoin run to 20,000 that first time. We'll call it 3.5 years ago, now about almost 4. And so that's when we started building, right? The huge rush of people who had this problem of, hey, I have a bunch of transactions. I'm triggering gains and losses every time I'm trading one cryptocurrency for another. And quickly this becomes very complicated. Myself and my two partners who started the company had this exact problem ourselves back in 2017. And so we got to building, we're like, hey, we can automate all of this and create a really simple user experience where people can just connect their exchange accounts, blockchain directly, and we'll import all that data. So then we launched the product right after the bubble had popped, if you will. But there's still a huge need for tax reporting up or down, no matter which way the market goes, because if the market goes down, those losses that you incur actually reduce your overall tax bill. Just like in the world of equities and stocks, right? Capital losses deduct against other gains and your ordinary income. So the folks who are using us throughout that 2018, 2019 bear cycle, like you referenced, are really using the tool to actually reduce their overall tax liability. And then once we go into another bull market, of course, people are making money, capital gains are getting incurred, and you, of course, owe some taxes on those gains, and you still have a use for the product. So that's what's nice about it from a business model perspective is win or lose in crypto, it's an infrastructure product that people need no matter what.
So, all right, so how many exchanges are you guys plugged into? If I've got, because that's the big problem right now. In many cases, people like myself, an investor, I chase coins. I'll chase tokens, and because I chase tokens, it means I end up on 4, 5, 6 different exchanges out there. So I've got to manage all of that, whether you're on Coinbase Pro, now I've got a Kraken account, a Gemini account, Voyager, you just can keep on going. And that creates a problem because it does have a lot of transactions that I've noticed, just me, I try to keep a little bit of a my own little spreadsheet that kind of measures all my investments and both on traditional markets, stock trading, and then over here on the side for crypto. And I'm telling you, it is a mess. And it's a full 2 hour a weekend just to keep up with it. Just every weekend I'm trying to update trades and all that kind of thing. With your product, would I be able to get away from doing that? That's what I want to know.
Yeah, exactly. What you just described is our exact target use case. So you're the exact target customer who has the pain point that we're solving for. So the exact same thing. People who come to us have been keeping spreadsheets. They're on multiple different platforms, and that is
Yep.
exactly why it gets complicated, because no single platform has the holistic view of what you're doing across the entire ecosystem. So our system just connects all of that in real time and can show you, all of your historical trades. We're pulling in future trades as they continue to happen. And that's exactly why people find the product valuable. You can essentially ditch the spreadsheets and connect all of your accounts, and we'll get it taken care of.
How often are you capable of being able to harvest that data? Could I look at a monthly statement or a quarterly statement? What would that look like in your platform?
Yeah, so the way we built the platform, it's not a subscription product. It's very similar to the business model of TurboTax, where just for 1 year, you can unlock your account. And then you have real-time access whenever you want to log in to monitor your assets. So let's say, Paul, you purchased your 2021 reports. Those will continue to update, and you can just constantly look at them, keep downloading new ones if you want to run different reports. So once you unlock that 2021 year with a single purchase, it's all up to you. People use us every day. Some people are only in there once a year, but it's not like a monthly subscription.
Nice. I like that. I like the annual program. I don't use TurboTax, but I have some friends that really kind of go in that. I helped somebody do their TurboTax this year. I was actually pretty impressed with what TurboTax has done. They're very advanced now in terms of finding all your tax positions, looking for those extra, squeezing out every deduction possible. Do you guys go into that with really understanding the tax compliance requirement? Because I know there's some variations with the way the 1099s come in at you, which is a lot different than if you're getting a 1099. Me as an S Corp and an LLC, we operate our tax position a little differently, but we do get those 1099s in, and it's usually a 1099B versus a K, which is the route, I think, for crypto that it takes. What's the differences between those, and how should you manage those types of 1099s?
Yeah, so you're hitting on the core of the problem of why companies like ours exist in crypto. So like you mentioned, in the traditional equities world, and I want to compare to that because from a tax treatment perspective, cryptocurrencies and equities are actually treated pretty much the same, meaning capital gains, capital losses incur when you dispose of an asset. So if I bought Apple stock for $100 and sold it for 250, that triggers a $150 capital gain that gets reported on Form 8949. And as you alluded to, your broker, let's say it's E-Trade, Scottrade, or Robinhood, will give you that information at the end of the year with a 1099B, okay? This does not and actually cannot exist in the same way in the cryptocurrency world because of the transferable nature of the assets. If you transfer Bitcoin into or out of your Coinbase account during the year, Coinbase loses the ability to track your cost basis. So they actually cannot give you a 1099B at the end of the year that's 100% accurate. That's why over the past few years, they've been giving a 1099K. We're getting into the weeds here, but it dictates just gross proceeds, which actually is not useful from a personal tax reporting perspective, because those are your gross amounts. Of course, you're only liable for your gains and losses.
Exactly.
And so because the exchanges actually cannot track cost basis, because to do it, they'd have to do what we do and integrate with all of their competitors and bring in all of that data from all these places to track your Bitcoin as it changes hands from BlockFi to Coinbase to Voyager, like you said, to DeFi protocols, to mining rigs, right? And so 1099Bs cannot exist in the same sense that they do in the traditional equities world. And that's why these data aggregating platforms like CryptoTrader.Tax, like what we've built, have exist and are actually becoming more and more integrated with just the underbelly of the crypto economy is kind of how we frame it.
All right. So as I understand it, David, is that like my CPA and accountant will ask for all of these reports, all of this data, before they can even start to compile our tax, report for the year, which essentially is what your service does. You're going to be able to provide what I need to drop it into a CPA or to an accounting firm and go right to work with all that information. They don't have to go chase this down, so it doesn't cost me a double whammy of them having to go do that. Is that right?
Right, that's exactly correct. So the folks who use us, like we've mentioned, they connect up their exchanges, they connect public Ethereum wallet addresses, all anonymously. We don't collect any personally identifiable information. This is all their data that gets all pulled into the platform, and then they can dump it off to their CPA in the reports that a CPA is going to very much understand. And so to your point, this saves a ton of billable hours if the CPA is going to be trying to do this themselves, which the CPA will wind up on a platform like ours no matter what, because you can't do this stuff by hand if the transaction volume is significant, which, as I'm sure you're aware, for a lot of investors is the case.
Yeah. Well, I mean, you look at it, I'm probably making 300-400 trades a year, I would guess, on many of these different things, whether it's DeFi and obviously in the main coins, even stable to a certain extent. I want to get into the aspect of the taxable positions, because I think this is where a lot of people get very confused. And again, this isn't tax advice, just for everybody to know. This is basically an understanding of what's happening in the space. Always consult your accountant, your CPA, and you probably should be starting right now today to find a good CPA or accountant that actually knows the crypto space or has a little bit of awareness around it. So that's the first thing. But David, when you look at the taxable events, does it work like any other traditional asset class? I take a loss on my stocks this year because the market crashed. That's not, obviously I'm seeing that as a negative loss. That's going to affect and give me a negative loss to apply against my income. All of that works the same way with crypto. Is that not correct?
No, you're really right. The one unique thing is just the characteristics of crypto that make this not ideal in some certain cases, because as you know, trading one cryptocurrency for another, right, even if it's stablecoin to Bitcoin, is the same from a tax perspective as selling your position. So this is why it's kind of different, because you aren't typically trading Apple stock for Google stock, right? You're selling and maybe buying with cash. But with crypto, this is where some folks get confused. They think, oh, I put in $10,000 of cash, okay? And then I had all this trading activity between Bitcoin and Ethereum and the Graph token, whatever it might be, and I cashed out for $12,000. I only owe the $2,000 of taxes. Well, that might be the case, but you're actually triggering gains and losses every time you're trading one token for another, which isn't ideal from a tax reporting perspective, but you are disposing of Bitcoin when you're trading for Ethereum. So that is where people get tripped up, like you mentioned, is on each trade or disposal, you're realizing gains or losses that have to be reported on 8949.
Yeah. All right. So and that works with even a stable coin like a USDC. Let's say you go in and you park 10K in a USDC. It's just sitting there, and then you're ready to activate it into one of the tokens, let's say Bitcoin or Ethereum. I start moving money into, let's say I put 5K into Ethereum and 5K into Bitcoin. I've just created a taxable event, even though that's a stable coin. Likelihood is I didn't take a profit, most likely. Or probably even a loss in most cases. So at that point, it is a trade, but it's not triggering a taxable event, or is it?
It is triggering a taxable event, but you're not going to have any gains on that trade because USDC is going to be pegged closely one-to-one to the dollar. So if you put in $10,000 to USDC, and then like you said, you spend, let's say, all $10,000 on Bitcoin, technically that is a trade that triggers a gain or loss, but the gain or loss is going to be $0 because it's still $10,000 worth of USDC at the time it was disposed of.
Here's the other thing I get a lot in the comments is, it's kind of like on the Robinhood investors, they've invested, we'll use traditional as an example, they've invested in Tesla. They sell Tesla at the high of this year was in the 700s. They sold, or maybe they're a GameStopper. But they leave it in there in a cash account, in the cash account in Robinhood. Same thing with like, let's just say Coinbase in US dollars. They've traded in, they've traded out, but they left it in Coinbase. Some people are looking at that as, is that taxable if I leave it in Coinbase in a US dollar? And I'm like, yeah, of course, you're going to get an event there. So you do have to understand that when even though you're moving it into a traditional fiat, it might still be in that platform for a use. If you made a gain, it still is the case.
That's right. Exactly correct.
All right. So when you get into the scenarios of all these different platforms, and we've mentioned many of them, then you have these opportunities where, are you guys tracking any of the gains on interest-bearing yield accounts or in yield farming programs as well? How do you handle those kinds of scenarios?
Yep, exactly. So as we've seen over the past 12 months, the amount of what we call taxable transactions in crypto has exponentially increased, because no longer are people just using crypto as an investment vehicle. I mean, you could still argue that. In terms of a trading perspective, now it's yield generation, as you alluded to. So, from a centralized perspective, you can deposit your Bitcoin on BlockFi and earn interest rewards monthly. Or you can deposit Ethereum on the Uniswaps or the Curves and Sushi Swaps of the world, and again, earn yield on being a liquidity provider. Every time you're earning interest in the form of cryptocurrency, that is a taxable event. It's treated as interest income. In the same way, if you received interest from a loan that you gave someone or from a bank account. And so every time more crypto hits your wallet from those interest rewards, as you alluded to, that's taxable income and needs to be reported on your taxes. And so we track all of that. CeFi, DeFi, the user experience is slightly different, right? If it's decentralized, you're simply going to put in your public Ethereum wallet address or whatever the blockchain platform is, the wallet address, and we'll pull in all of your transaction histories associated with that address and classify them accordingly. Of course, on the BlockFi side, it's similar to how connecting your Coinbase account would work. But it's a great question, and that's a huge driving use case of crypto, and it's great because it's onboarding a bunch of people and people are making money, and there's these credit markets that have evolved in the space, which is very fascinating.
Yeah, it's I started yield farming here recently. I'm just blown away by the pools for liquidity that are being assembled in these. If you just look at what's happening on Sushi Swap and what's available out there, it's very intriguing. And then of course you've got your traditional yield opportunity accounts like a Celsius or a Voyager, who's paying upwards of 9, almost 10% in many cases. So yeah, you have become the bank in many cases. So you have a new kind of income line, at least this year, in terms of earning interest, because typically you've never seen that before from your traditional banking accounts, and definitely your trading accounts. Very few of those are paying interest at these levels, for sure. I want to get into this whole idea of Section 1031, because this is one that a lot of people, and I know you've written about this topic, and it's a little confusing because some people assume. First of all, let's explain Section 1031 and the treatment for that, because this was you kind of mentioned this kind of happened around the 2018 period. There was a lot of people that were kind of using that. How do people use it? What's the whole process there?
Right. So a 1031 exchange is commonly used in the world of real estate. Now, again, real estate is considered a form of property from a tax perspective, just like cryptocurrencies. When you purchase a house, let's say it's called for $300,000, and then you sell it, you have an opportunity to take a 1031 election and roll over your capital gains to another piece of similar property, another piece of real estate. And if you do that, you defer your capital gains down the road for once that property is disposed of. This is how real estate investors continue to compound. It's another tax advantage of being in real estate. There's a lot of them. This does not apply for cryptocurrencies. It was a big gray area until the Tax Cuts and Jobs Act clarified that it is not allowed for cryptocurrencies. It was only allowed for specific assets like real estate. But prior to 2018, many tax professionals and cryptocurrency investors were making the case that because I'm selling my Bitcoin for a piece of like-kind property, call it Ethereum, I can apply a 1031 election and defer my gains until I sell that Ethereum. So that's how it works from, the high level.
So David, let's jump into future-looking scenarios that could apply both from an IRS standpoint, and I know this is all speculation, but at least there's some signs now coming from whether it's the SEC with trying to either classify this as a new investment class or leave it alone as a commodity. Would that change things any for investors, or it's pretty much kind of business as usual for the next few years?
Yeah, it potentially could change things. Unfortunately, I don't see things changing in the near term. But one thing that I see could be a possibility of changing is if at some point in the future, the United States changed its treatment on stable coins. If stable coins really do reach mass adoption, and as you know, they're treated as currencies, like they truly are trying to be a medium of exchange. It doesn't make a whole bunch of sense to treat those as pieces of property that you're incurring gains and losses on when you spend it on a cup of coffee. And so hopefully the governing authorities around the world come to terms with things like that. Pieces of crypto, of course, like Bitcoin, Ethereum, unfortunately, I don't think are ever not going to be taxable from an investment perspective. But to your point, yes, I do think specific legislation that comes out over the coming, call it 5 years, would have impact on tax implications of crypto. And hopefully that'll be good with what they put out.
Yeah, I mean, we have seen some pretty heavy moves on stablecoins here over the past few months and now Yellen is asking for a lot more regulation. We've seen a lot of companies now we have that are kind of pushing for that. You see Circle, USDC now going into a SPAC IPO. We've got a lot of activity, and then of course you have potentially the US digital dollar, the digital euro, the digital yuan all coming into play on this. So it's going to be very interesting. I think the number one thing for you as an investor, as you're watching or listening to this, is you've got to stay up on this stuff in a big, big way, because there's just so much activity. And as this thing goes mainstream, meaning crypto, because we're still not mainstream. A lot of people, even though you watch this channel, we think we're mainstream, but the reality is that we're a very small percentage of the population that actually activate and invest in it. Are you going to be ready, David, for when when Bitcoin hits 100K and we see mass adoption moving into this space over at your website? Because I'm a little concerned for you guys right now.
We'll be ready. We'll be very ready. We saw a crazy spike even just this past year, as we've seen the market really, I'd say, over 10x in terms of market participants. Which has been great. Sure, it's a challenge as you work to scale up various aspects of the business, but it's exciting growth, and we're absolutely ready and are scaling up the team pretty aggressively right now to prepare for that 100K Bitcoin when it comes.
Yeah, I don't want to leave on a downer note, but I want to talk about the IRS for a second. You guys were involved, not involved, just you were aware of this. IRS Assistant Deputy Commissioner John Cardone basically said they're hiring a whole bunch of contractors that are going to help people. I shouldn't say help. They're going to have a whole lot more people available for measuring and tracking all these gains and losses. And of course, the IRS did confirm the authenticity. Tell me about this. Is this kind of a thing where crypto traders have a bullseye on their back now?
Yeah, so the IRS reached out to us to see if we'd be interested in becoming a private contractor for them to essentially help audit the validity of tax returns that had crypto on them. We turned that down. We want to solely focus on our user base and serving the retail cryptocurrency investors and users. But you're exactly right. The IRS is extremely focused on cryptocurrency as a whole and enforcing tax compliance. Sure, that's good for a company like mine as it creates tailwinds for using our product. But just in general, people out there should be aware that hey, the IRS is becoming a lot more serious about enforcing this and making examples of people. So like you said, it's a downer note, but that's why we're building the software, is we do want to just make it as easy as possible for folks to just stay in compliance and stay within the bounds that the rules that the government set, whether we like them or not.
Yeah, for sure. I think the takeaway here, guys, all of you viewers out there, I know that you're the right kind of people that are in crypto. You're not that, kind of the old guard of crypto, which was a little bit sketchy. Now it's kind of become a mainstream investment vehicle. Real investors are in it, and we have a lot of people that are watching this channel that you guys are looking to do it the right way. And I think these are the kind of tools that are going to help you kind of move into that area without a lot of the pain points, because I think that's the bigger problem here. It's not even necessarily the compliance issue. It's the pain that you have to go through to get all this done, and you're just adding to it versus your old trading account with TD Ameritrade or Schwab, where you get a nice little report and your CPA knows exactly what to do with that. So it's going to be something very close to watch for sure. David, it's great having you on. Thank you so much for stopping in today. We'll definitely put a link to CryptoTrader.Tax down below. You guys will be able to jump over and check them out and see a little bit more about them. But I want to have you back on, hopefully in tax season, to tell us if there's any changes and any updates for sure. But thanks for stopping in.
Yep, we would love that. Thanks for having me, Paul. It was good chatting with you.
Awesome. All right, so you guys are listening in over on the podcast. Maybe you're right here on YouTube. Make sure and subscribe. Give us a like. And if you like this, make sure and share it with someone you know, especially around the tax compliance issue, because this is something that's really serious. We're 6 months out, I know, but I'm a big planner. And I also start thinking about how I handle my back half of the year in terms of investments, trades, all those kind of things. You need to start in July. I know that's crazy, but yes, being prepared is a very important thing, especially with the complexity of the asset class that you're mainly interested in if you're watching here on TechPath. So I suggest that you guys really put some thought process into that. If you have an idea for the show, drop it in the comments below or hit me up on Twitter. It's just @PaulBaron. We'll catch you next time right here on TechPath.